I do not think the U.S. is currently in a recession.
That doesn't sound like a recession to me.
We are not currently in a recession or a pre-recession.
That is not what we see in past episodes that the NBER has labeled to be recession.
So my definition of a recession is a holistic definition. It goes well beyond 2 quarters of negative GDP. We are not yet in a recession. We're not. The labor market is too strong. Consumer spending is too strong. Business balance sheets are too strong. We simply are not in a recession. Is the risk of recession high? Yes, it is high and getting higher. So we do have a high risk of recession. It's not preordained. There are and should be various measures to be taken to stop us from slipping into recession, but let's monitor it. The risk is certainly high.
There are a couple of different definitions of a recession. The first one is 2 quarters in a row of negative GDP growth. In other words, the economy is contracting or shrinking for 2 quarters in a row. That's number one. Number two is when an outfit called the NBER, the National Bureau of Economic Research, has a declaration of a recession. And that occurs when basically they see a widespread, a sustained contraction of economic activity. In other words, it's sort of like a visualization of the economy on a nationwide basis, shrinking for at least a few months.
I don't think we're in a recession. I think given the difficulties associated with high inflation and bringing it down, the necessary monetary policy response, the odds that the economy will go into recession within the next 18 months are quite serious and probably in the 3/4 range. And I think that if the economy gets into a situation where unemployment rises, unemployment is likely to rise quite substantially. And so I would expect sometime within the next 2 or 3 years that the unemployment rate would cross 6%.
I think you have to prepare yourself for the probability of a recession. We recently increased our probability to about 70% in 2023. And the reason for that is, again, looking back at these 2 data points, which are really the overall inflation number as well as employment.
So far, the economic activity doesn't really match what the NBER says is a recession, which is sustained contraction of economic activity across the country for at least several months.
Of course, there's a lot of debate about whether we're going to go into a recession too, because it's very difficult to predict what is going to happen next in the US economy. And the last couple of years have made that more clear than ever, that it is extraordinarily difficult to predict what is going to happen next in terms of what we've seen with the pandemic. And then also what is unfolded after the pandemic, which was also very unpredictable.
Strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy.
Well, the Federal Reserve wants to slow the economy down. And the way they do that is by raising interest rates. And that will sort of choke off economic growth, which will lead to job losses. The unemployment rate is very low, 3.5, 3.6%. But I think that actually the Federal Reserve would like to see unemployment go up. They need to get inflation way back down to low single digits. Recessions are not good for investors. They're not good for the stock market. And usually a weak stock market and a recession go hand in hand. One thing to remember is that the stock market can often be a leading indicator. The stock market goes down first, anticipating a recession, and then the economy actually goes into a recession. And then on the other end of things, the stock market can recover before the economy recovers. So it's sort of like the stock market goes first and then the economy follows. Not because the stock market causes the recession, although it can sometimes, like it did in 2008, along with the housing market, but it's just because it's an indicator of bad times.
A recession in the economy doesn't always mean that there's going to be a sharp pullback in markets. If you look at the last several recessions, there is not sort of a perfect overlay of the S&P 500 in a bear market at the same time that the recession is occurring. We had the stock market entering a bear market, that is a drop from at least 20% from the highs, in anticipation of the Fed raising rates, which then eventually could potentially lead to a recession. Now, there are some stock strategists who say we still haven't fully priced in the potential for a recession. So there could potentially be more declines for the market, and almost certainly there will be more volatility. In terms of, there's going to be a recession and stocks are going to do X, Y, Z, there is definitely not a sort of strict formula as to what's going to happen.
Recessions can be national or they can be global. Usually, economic activity in this day and age is linked around the globe. So it would be unusual for one country to be completely immune from a recession while another one was in a bad recession. So there is a lot of connectivity around the globe, particularly between Europe and the United States, because our economies are so linked. And in fact, right now, because of what's going on in Ukraine and with the energy situation as it is in Europe, depending so much on Russian gas, for instance, I could see the European economy being weaker than the American economy. And in fact, the European economy has been weaker than the American economy, since World War II, without question.
The global economy is interconnected. Companies that are based in the US do business elsewhere, vice versa. That said, if there is a global slowdown, not all economies are going to slow at the same rate. And there are different factors affecting different economies to a higher degree or another. For companies that are US based, that operate in Europe, they're likely in some cases to see slowing sales. Will there be a really huge economic effect? Right now, it doesn't look like it. And the United States also has the advantage to being much more energy independent at this point than Europe. And so won't necessarily suffer at all times from the same kinds of skyrocketing, higher perhaps, but not skyrocketing energy costs.
Right now, it does not feel like it did in 2008 or even in 2020. In March of 2020, we had a mini recession because of COVID. But remember, the economy basically just completely seized up and stopped in March of 2020. In 2008, 2009, because of the financial crisis brought about in the housing market and the financial services business, the economy fell off a cliff. The stock market tanked and the economy again just really slowed down. You couldn't get a job. There was no growth by businesses. It doesn't feel like that at all right now. Right now, everyone's talking recession, but I would maintain we're not really in one yet.
For those of us who lived through and indeed covered the financial crisis, this is a very, very different animal from that recession, which was a deep recession, which was a recession that was triggered by a financial crisis, by instability in the banking system, in which liquidity, that is cash in the system, effectively really tightened and dried up. So that was a different situation. That is not the problem this time around. If indeed there's a recession, it will likely be brought on, or at least contributed to, by the Federal Reserve, the central bank of the United States, which has been raising rates, interest rates, in order to fight the aforementioned inflation. But to do that, they have to slow down growth, to slow down demand.
This is not what a recession feels like. And believe me, I've lived through recessions. Of course, March of 2020, which was the quickest recession on record, really, 2008, 2009, the tech bubble of 2000 and 2001. But I even really remember when I was a kid growing up in the 1970s. And the stock market from 1966 to 1981 went absolutely nowhere. That's right. From point to point, those 15 years, it didn't move. It went up and down a lot, but it just ended up in the same place. And a lot of that was a reflection of the weak economy. In the 1980s, there was just this explosion of growth all over the country that, the economy just sort of woke up, and there were all these new buildings and new jobs and new companies. So it really is a very different environment when the economy is growing slowly and when you're in a recession. And we may get a recession right now, but at this moment, I would submit that we're not in a recession.